What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we're going to be talking about the Bitcoin price chart as the price sits a little bit over $68,000, and over the weekend, getting back to those July highs over there, a little bit over 69,000. And as we get ready to kick off this week, it's a pretty big pivotal moment for where Bitcoin is at based on a lot of the things we've talked about for the last year. And the fingernail biting is going to be setting in here pretty intensely as we're at this level. The thing, of course, that should be on everybody's radar is waiting to see if the stock market is capable of expanding. The Russell 2000 was unable to get through the 786 last week. The story of 2024. In all of Bitcoin's prior expansions, it was with the Russell, it was with the broadening out of the United States stock market at the exact same time. And so with where we're at right now, of course, there's a lot of confusion out there. I've often described this as uncharted waters. This time is different. Something is going to get proven wrong because we are at a situation of 4 years, right? It's October of 4 years. Historically speaking, throughout Bitcoin's entire life cycle, this is where the excitement has kicked off when we're just looking at timing of months and years. Every 4 years, October, things start moving, October and November. But for some reason, we have a completely different macro setup from what we had in the 4-year cycles of 2013, 2017, and 2021. The setup the market is presenting is entirely different from all three of the last Bitcoin bull runs. And now that it's been over 7 months since the peak of Bitcoin was set back in March, you may have noticed a lot of disagreement out there on whether or not Bitcoin's going up, Bitcoin's going down, are we going to see a crash? Now, a lot more people on the idea that, hey, this was just a big giant retrace, and where we sit right now is more like right before C-19 happened. Now, of course, if something like C-19 were to occur right here, it would shatter the 4-year cycles. They would officially be done. Because by the time you get to here in October, after 4 years, this is where things should be continuing to march up and you're entering into that parabolic expansion and going off into the bull runs. However, the price chart sure looks awfully similar to what it looked like before C-19. And of course, we just can't get an expansion happening over here in the United States stock market. Now, I'm not going to spend this whole video trying to scare you to death about that. We're going to really talk about this dynamic and say, where have we seen this? And is there any optimistic way that this just doesn't turn into C-19? I don't have the answer for that. I think I've spent a long time talking about that. We're waiting to see how it's going to end up panning itself out. And right now is obviously a big critical moment for that, where people are going to play defense on it. They're going to sell, protecting themselves against that moment happening. But to understand the concern and why it's not like, hey, everything is roaring, it's because we don't have the lead happening in there. There's this extreme consolidation in the United States stock market. You know it. It's the Mag 7. This is not a broad-based rally. I believe right now, the consolidation of just the top 5 of Amazon, Apple, Google, Nvidia, Microsoft, I think they represent 28% of the S&P 500, where you go back and you look at the peak of the dotcom bubble in 1999 and 2000, the top 5 assets only represented 14%. So the consolidation is absolutely extreme. But when it comes to Bitcoin's life cycle, we really have 4 different time periods we can go look at where there were expansions taking place in the market, or at least new all-time highs being set in the market. And 3 of those times were actual expansions happening in the United States stock market. And that, of course, was 2013, 2017, and 2021 during the periods of the Bitcoin bull runs. Then in 2020 and really late 2019, the stock market did something very similar to this, where the Dow, the S&P, the NASDAQ, they all set these new all-time highs, but the Russell 2000 doesn't follow along, and we go into C-19, right? So that's, of course, where everybody is scared right now. You got extreme consolidation in the stocks. You have the S&P, NASDAQ, and Dow Jones in the new highs, but the Russell just won't escape. And then Bitcoin's got this really similar structure happening in here of what it was like when Bitcoin only did a retracement and then eventually went into the C-19 crash happening after that. So that's the big concern. And that's something we've talked about for a very long time period. But now at this point, there's a lot of people kind of seeing it now, right? So a lot of people seeing this setup starting to manifest. And so a lot of the people that were extremely bullish at the peak have now flipped over and been like, hey, look, there could be a crash happening in here because these setups are quite similar. But again, at the same time, if that were to happen, the 4-year cycles then eventually become shattered. This time was different. 4-year cycles don't matter. So you're in a rock and a hard place, and that's why everybody's having such a difficult time right here, because it's uncharted waters. You're at the 4-year cycle expansion period, and you have the very similar setup to what happened before everything crumbled. And so our biases, of course, shift back, and we just kind of look throughout what happened in the cryptocurrency market when we've had these setups. Like mentioned, right, the 3 expansion periods, 2013, 2017, and 2021. And then you have the late 2019, early 2020 setup that was very similar to this. Since the great financial crisis, those are our 3 real examples of how this market has behaved. Expansions of 2013, 2017, 2021, and then consolidation and a lack of breadth in late 2019 and 2020 that led to the C-19 crash. However, the Russell 2000 has been around for 40 years. It was introduced in 1984. And so throughout the weekend, of course, I spent a lot of time just diving way back through history to try to find any type of examples on where the Russell can break out after being so prolonged. We don't have anything in modern history. And when I say that, I'm referring to post-Great Financial Crisis. Essentially, in this entire bubble that has been printed, there's never been a setup where the Russell does that and it becomes extreme consolidation. The only time it ever happened was right there, where the Dow, the S&P, and the NASDAQ went on to set new highs, but the Russell didn't follow, and then C-19 happened. Otherwise, every single one of these expansions happening in here, it's a broadening and opening up of the market. Yet, for some reason here, it's the same dynamic as what happened in here. So, of course, dealing with a new asset class that Bitcoin was created right here, we pretty much use all of these as our examples, right? We also attach a lot of narratives of what Bitcoin is, what it means, but of course, we don't really know what happens in the event of a turnaround in the market to head down like that, considering Bitcoin has only existed in here, and every Bitcoin bull run has taken place during expansionary periods of the US stock market, right? There's your 2013 bull run, there's your 2017 bull run, there's a 2021 bull run. We don't know what happens in here. I can make my best guess, which I think a lot of you know, but we're dealing with something different in here than we've had to really deal with throughout here, unless if we look to C-19, right? If we're only going to use one hard rule and say, if this, then that, then it means, you have to look at it through the lens of C-19. And so that's why you have all this worry and all this concern that these things are going to happen in here. And they're all valid worries and concerns because we don't know. But like I mentioned, the Russell has been around for 40 years. Has there ever been a time before where you could do something like this with the Russell being delayed? Because it didn't happen in 2013. It didn't happen in 2017. It didn't happen in 2021 bull runs where breadth didn't open up in the market. And there was one time, 25 years ago, where a dynamic like this did actually end up happening for the Russell 2000 and the NASDAQ and the S&P and the Dow, way before Bitcoin's life cycle. And for a lot of people watching this channel, when you were little teeny tiny babies. And it was actually at the peak of the 1999-2000 dotcom bubble. This is the only other time in history that something like this happened. Otherwise, the Russell has always gone with it. But there was one time 25 years ago where something like this happened, and it happened in the final moments of the peak of the bubble in 1999 and 2000. In November and December of 1998, the Dow Jones, the S&P, and the NASDAQ all did break through their prior high, where the Russell 2000 was incapable of doing so. It took about a year, maybe a little bit more in some circumstances here, for the Russell to finally be able to catch up and get out and get into expansion. Otherwise, everything had gotten out except for the Russell. This is also that period, like we talked about earlier, where it's like 28% of the S&P 500 right now is denoted to the top 5 assets, where back in 1999, it was like 14%. But even back then, that was considered really terrible breadth. What we're experiencing right now is just unheard of. But the story of breadth was ongoing here as well back in 1999. But what eventually ended up occurring is that the Russell did eventually play catch up at the end. And that ended up being really kind of the marker of the top. And so what we ended up seeing was that there was a correction that came out of those top consolidated assets up there. And then a rotation in the market started to happen throughout here. And if you notice in here, when this happens back in 1999, you may not be surprised to see that it starts in October of 1999. You essentially get 6 months of a run up, and then the entire bubble popped on itself, as we all know, back here. And of course, we have something that certainly looks bubblish happening up here for the US stock market right now. But I thought it was really important to point out there was actually another time in history. This is the only one that I can find. We have 40 years of market dynamics like this to look at this and make these types of comparisons. And we really only have 2 examples to look at that have somewhat resembled what we're seeing right now in the United States stock market. One of them being C-19, which of course the price action of Bitcoin looks like that right now and has everybody pretty on edge. But the other example, of course, is when we were creating a speculative bubble in US markets with an extreme lack of breadth happening. That was how the 1999-2000 dotcom bubble ended. Everybody was chasing a handful of names. Eventually, the interest in that wore out. There was somewhat of a rotation that happened throughout the market. The breadth opened up for a few months throughout markets, and then things all came to a conclusion. And so we look at the time period right now that we're living in here in 2024, and of course we have very similar things going on, right? You have the S&P, the Dow, and the NASDAQ all in these highs with extremely consolidated breadth, with the Russell still sitting below the 786 retracement and of course below the high that was set back there in 2022. Similarly to like what we saw back in 1999, where all 3 of those indexes get out, but the Russell does not. One thing, of course, that is interesting as well as that we talked about is that back there in November, December of 1998 and January of 1999, this is where all these things get out. It takes almost a whole year for this thing to finally get its way out. Well, guess what? It's been almost a year. This was all back in December of 2023. We're coming up on 10 months now since all of this ended up happening in here. So we're all trying to draw parallels between different time periods to say, which one is this? You know, every single Bitcoin bull run, the stock market just acted the same. It happened with all these expansions where the Russell goes not at a delay of the rest of the indexes, but at the same time as the rest of the indexes, like in 2020, 2016, and 2017, and 2012 and 2013. Where it's broad-based rallies every time for all 3 bull runs. The only time in Bitcoin's life cycle where it doesn't happen and all 3 indexes get out while the Russell doesn't, of course, is in 2020. And that pretty much lasts from October of 2019 until February of 2020 till things start falling apart. So, of course, we look at it through that lens and say, well, in Bitcoin's entire life history, this has only happened one particular time period, and it happened back in 2019 and 2020. This is the setup we had. This is what it was doing. The Fed started cutting rates, and this is what the chart looked like. And so now we're going to crash, right? And of course, we could say that for a whole year, and everybody calls you a dingus, and then you finally get here, and then everybody's on that page together. It's quite frustrating, but there was also something very specific about 2019 and 2020 about Bitcoin and about the whole structure that happened in here, that this was really a normal correction that even called for something like that to happen. And in Bitcoin's life cycle of super cycles, that was really exactly what had happened in this range previously, that you have a crash, retrace, reaccumulation with an ABC correction, ABC correction. So it really wasn't that uncalled for something like that to happen here. And then, of course, everybody's like, we have the most muffled bull run in history, but even for super cycles, wave extensions, it was an appropriate sized bull run that happened for Bitcoin. But it would be highly unusual to just suddenly do the C-19 crash from right here. And as I've spent my entire weekend diving through all of this, you have to make 2 conclusions. You have to make the conclusion that either we're doing the C-19 setup that right now destroy the 4-year cycles, and the 4-year cycles are going to come to an end here right now, or we have to go back further than Bitcoin's entire life history and stop drawing conclusions to what Bitcoin has done historically and done based on the past of its 15-year life cycle, and understand what macro markets are doing. And the likeliness is what it appears to be, is that this is a full-blown bubble being printed in the United States stock market. And during this phase of a bubble, you actually do see consolidation of breadth happen in moments like these in stocks. And the thing that you're actually waiting for is you're waiting for Amazon, Apple, Netflix, Google, Nvidia to all have their first big major profit take happen and for a rotation to actually take place throughout the rest of the market. The parallels between what are happening right now and compared to 1999 are far more similar in that regard. You still have the gold and silver, they're doing quite well. You still have the big question mark on the Fed and the cutting and the easing. And it's hard for a lot of people to draw back on an experience like this from 1999, including myself, because I was not active in markets in 1999. But having to understand the context of what happens when a top of a bubble is happening and that the chase happens in a select couple of assets. And for those who came in 2021, you probably don't realize it either. Those who came in late 2017 or early 2018 probably don't recall it either. However, if you were in crypto, really in 2017 prior to October, you could probably draw on a reference point of what happened during that time where Bitcoin was running from, $3,000 all the way up to $17,000. And the rest of the altcoin market was really not partaking in that run. It really was the Bitcoin show when that entire bubble was being printed for Bitcoin. Then once Bitcoin kind of stalled out at $17,000, that's where the rotation in the market actually ended up happening. Bitcoin went on to, touch 20K, then fell to 10K or 11K and did a retrace, and the altcoin kept running. But there was this period of Bitcoin in 2017 where it was really roaring, yet the altcoin market was not partaking in that. And that's the best analogy I can provide to if this is not a C-19 scenario to being like, what is happening in broader markets right now? And it's that there's a massive bubble being printed. We're watching the consolidation into a few assets. And essentially, in order for the breadth to be able to open up throughout the rest of the market, it'll have to be some type of initial profit taking that takes place on Netflix, Amazon, Google, Apple, Microsoft, etc. And I find it more likely that that is what we are seeing throughout broader markets rather than a C-19 setup happening in here. There's probably going to be a pullback that happens in Bitcoin. It's probably going to scare people pulling back down in here. The bears will be screaming that we're going to crash into oblivion, that C-19 is coming. But I've tried to argue in here that it appears that we've already done what C-19 would have been. That when the altcoin market had run back to its 702 retracement of that entire range back in 2019 and 2020, C-19 took us all the way back down to the lows. And we know that we ran back to the 702 retracement for the entire altcoin market. We already saw a 58% crumble in the altcoin market. And then we can look at other assets to see, hey, we've really done these structures and these distances to take out these lows already way down in here. To be nervous of a C-19 crash would be more appropriate back up in here when you're in areas like that before they end up coming. After they end up playing out, well, now all of our emotions are already tied up because, the euphoria is gone, the excitement is gone. The people who were telling us we're going to the moon are now telling us we're going to crash and crumble. So the excitement is gone. And it just is so convoluted at this point. And you mix in the dynamics of why the market is acting so different than it has historically. And everybody's just kind of beat up. And we're all having to make our best guesses from right in here. And these are things we've talked about for a long time. And now you're at the point of kind of finding out. Why has the stock market acted so differently than it has in every single Bitcoin expansion? Because there wasn't an expansion in the market. And you have to draw two conclusions. You have to say it's either a C-19 setup happening right in here, or it's a massive bubble being printed in the United States stock market. And when you get into these final legs of the bubble, you do see these breadth consolidations happen in these final legs, as we've seen historically, not just here in 1999, but we also saw it in 2017 crypto. And you're essentially waiting for the profit taking to happen on Netflix, Amazon, Google, Apple, and Nvidia and Microsoft. And at that point, a massive rotation happens throughout the entire market. My bet is that is more likely than C-19. It doesn't mean we're not going to correct from here. It's very probable that we are. But to do a C-19 seems very improbable to me because we've essentially done it all, or at least most of it. If we were sitting right here, right now, rather than already being way down here, right? Like if we were sitting right here, right now, I'd be on here screaming, we're doing C-19. It's over, guys. Run for the hills, run for the hills, run for the hills. But it's not, right? It's way beyond that. And I've continuously referred to this as, you're in uncharted waters. And this time is different from a lot of different stuff because it's going to do different things. We've already hit the 50-week moving average. If we crash and crumble into a bear market like we have every time we've hit the 50-week moving average, that means there was no 4-year cycle for the first time. Or if we bounce off the 50-week moving average and go into a bull run, that's the first time we've bounced off the 50-week moving average and gone into a bull run. So no matter what, whatever the result is from those two things, this time will be different. This time is definitely different when it comes to all of Bitcoin's past expansions, because when we've gotten to October, you've always had the expansions happening together. Instead, we're mimicking two separate time periods. We're mimicking what happened prior to C-19, but at the same time, we're mimicking what happened when an actual bubble was being printed in the United States stock market and the breadth was extremely consolidated into a few assets. However, there was an expansion that took place later. But to recognize that when that expansion did come, it was the marking of the end. And that's one thing to kind of think about too at the same time, is that, you could sit here and be worried about C-19 crash all you want. But this is where my mind has really been throughout the entire weekend. This was kind of the breakthrough that I had throughout the weekend, really reflecting back on 2017's crypto bull run and Bitcoin roaring all the way to $17,000 on the altcoin market, not participating with it until the first profit take on Bitcoin happened. And then the altcoin market took off, just as we saw with the Russell happening back in the 1999 bubble. That no matter what, when we are doing things like this, whether it is the 1999 top or whether it's C-19, it spelt trouble coming for the years to come. And I'm not here to scare you to death on that, but it's to also think of it in the light of, and the way I am approaching all of this is that if we do end up seeing expansion come throughout markets, if we do end up seeing the Russell catch up and get going, I personally am not going to get caught up into the 4-year cycles, and that block reward halving theory suggests that we have to continue going until September, October, November, December of 2025, and that's when everything comes to an end. I think we're at a pivotal shift happening in the entire market. And I think that's even reflected by what you're seeing in gold being in these new highs after all these years, and silver now at new highs after 12 or 13 years. Silver obviously not at its highest price, but the highest price it's seen or in 12 or 13 years. And that typically before things get really bad, they really look really good. So, I won't be afraid to be a seller in these environments happening in here if we end up getting something like that to come up. And like a way you would interpret that is this being kind of like right in here right now. The Russell has worked its way back up. It's having a hard time working its way through. It's just kind of chilling right there, unable to get itself out. But, if you find yourself questioning, why do we always talk about this on the channel, right? Why is this always being brought up in this topic? And it's that, there's a very strong culture in crypto that we operate on 4-year cycles and that things happen in very specific time periods and they just repeat themselves and they do that. But just accepting that as magic for me is not good enough. I have to have some type of reason and justification for why that's occurring. And I present all that data to you to try to show it to you that, hey, it was actually all these timed events that were happening in macro markets in this big giant bubble we've printed since the great financial crisis, that when expansions were happening in broader markets, that's when Bitcoin took off. That's when the crypto market took off. And so during all of our 4-year cycles, we had the exact same thing happening over and over again, that you have these expansions, these openings of breadth all happening at the exact same time. And even in the event that we do see the crypto market move up, it's going to be different than what happened in 2013, 2017, and 2021. And it's trying to lay a foundation of an understanding of being like, what is happening with this market? Because this market is not doing what 2013, 2017, and 2021 were. It's just not. And it doesn't matter what lens you look at it from, of how long it's taken for the altcoin market to be able to do anything, or how long it's taken Bitcoin to break into an all-time high, right? This is the longest it's ever taken for Bitcoin. Why? Well, because there hasn't been an expansion in markets. And so if there's not an expansion in markets, but if there potentially is one to come eventually, having to have a context and a framework of being like, why why is it coming and why is it coming so late, right? Why is it not happening at the same time that it always has? And if we go through history and we say, well, when that did happen, that was because a major bubble was being printed. And that when the Russell did eventually break out a year later, the one time that it did happen, it was because we were approaching the end of a macro bubble. In the event that something like this plays out and you do something like C-19 from here, it can be very difficult to try to figure out Bitcoin's move going forward. You essentially have already gone past the 4 years. You've hit the 50-week moving average. How to present, this is super mega bullish after that. It's going to be difficult. I lean far more on the idea that we're just doing something along the lines of this, that it's probably going to be sloppy here for a minute. We'll do waves of equal length, and this would happen with an expansion happening with broader markets at the exact same time. At least this is how I'm positioned myself within the market. I was very nervous, very concerned, and very vocal about it back in February and March. But now that we've come all the way back down, it's just hard for me to have that same vision when we don't see these same things happening in the rest of the cryptocurrency market in a time period like this occurring in here. Certainly things in like the Russell are concerning with us not having that breadth open, but you see things still like Netflix and Nvidia still continuing that march happening in there. And you have to pose the question of saying, is this really more of just like what a bubble looks like? And we'll dive more into that in the weeks coming and do some comparisons to 2017. But I thought it was important to show you this because we talk a lot about it on being like, hey, look, there's only one time in Bitcoin's life history where something like this happened for the Russell, and this was the thing that happened. We don't know if that's going to end up happening right now, but when we look throughout the entire history of the Russell 2000 and before Bitcoin was around, there was one other time where it did happen, and it happened during the dot-com bubble peak. It happened during the topping process and the rotating process happening up in there, where breadth really got shallow again, like we're seeing right now. And then eventually a year later, the Russell did go out for it. It was about 3 months of excitement happening throughout markets, and then things came to an end. So that can't be ruled out still. And we haven't covered this on the channel, and I wanted to show that to you to say, hey, there was one time where this did happen, and it was at the peak of the dot-com bubble. And as of right now, it's going to be kind of seeing if Bitcoin can just kind of maintain some higher lows happening in here. So my thoughts are Bitcoin's probably going to be correcting in here, but trying to see it try to maintain in this range. We've talked a lot about that with others and with the altcoin market, that there would be something of an ABC that would still kind of work itself out in here. And this was kind of been my concern of the market, that a lot of fear and stuff like that would enter into the market while we're in here. None of this has changed, but I wanted to give you guys context of, if you go out there on Twitter, you go out there on YouTube, you're going to see it everywhere. We're going to crash. We're going to crash. This is the context that everybody is using. It takes into the idea that we haven't seen expansions throughout broader markets, but I wanted to give you one example where we did see this dynamic happen in the Russell 2000 versus the other indexes. It did still eventually lead to an expansion, but to also know that was the end and the last one before the next 10 years of the stock market turned to trash. And so this is a very long video, and I apologize for it being so long, and a lot of it's kind of repeating itself, but I think it's just because we're at this level. We're like here, right? It's been the discussions for months, nearly a year at this point, and now the market's going to now issue out the answer. It's going to be just a tremendous amount of fighting on Twitter and arguing on Twitter and disagreement on Twitter on whether or not this is going to turn into a range or if this is going to be something along the lines of a major crash happening in markets. And this is going to be the big fight right now. And I know throughout all of this time, we've spent a lot of time talking about the Russell not being able to expand. It still is not able to expand. You got gold and silver breaking out. You got a lot of warning signs happening in there. But at the same time, you're also in those periods that have historically shown expansions happening in broader markets. And I think there's a reasonable remote chance that we are just going to have to slop around in here for some time, and that is also the thing, and that it's just going to be big fighting, big arguing over there on Twitter over which one of these things are going to end up coming. And I really also wanted to present this to you of how this did happen one time before, 25 years ago, in the final phases of the dot-com bubble, where the breadth got carried away and consolidated into just a few assets. The Russell was left behind, and it took almost a whole year for the Russell to eventually get out. And this is the only other example we have out of C-19. It's an incredibly intense time in the market right now. And that is because regardless of us being at October, at the 4-year period, if there's one time to say, hey, we're going to find out the answer to this thing, if this thing ever was what was going on, we're literally there right now. And it's time to find out. My personal bet is placed on it actually being something like this. But I know that even me having to say that I think that's going to happen would also have to mean that this time is different. That this time it's going to be different from C-19. It's going to be different than 2019 and 2020 when the Russell was doing this. Or it's going to be different this time, even though we've already hit the 50-week moving average. I already know that me having that bias means that I have to believe this time is different than those time periods. But I also know at the same time, having this belief that this time is different also means it's the end of the 4-year cycles as well. So it doesn't matter which one ends up playing out. And that's what makes this one so difficult than all the other ones. You had the exact same conditions in 2013, 2017, and 2021. Everything is different this time. For those who are day trading, it's a clear, obvious place to be selling at. Anything above $72,000, $73,000 starts to paint the picture a whole lot more clear. And I probably find myself in more of one of those times of having to create a YouTube video and discuss this and be like, man, here we are, like, here we go. It's gonna give us an answer. And I don't know if it's going to end up doing that, because in all of this, you have the confliction of everything: 4-year cycles, expansions, breadth, timing, C-19, bubble tops. All these things are all conflicting with each other and creating such a wild picture in here right now. But for this idea, right, it's a very crucial level. So the things we'll be watching for in the coming weeks is just to see, hey, can we continue to hold these levels? If we hold inside of these ranges and just kind of continue marching up with these highs as we have been, then things are structurally just still continuing to climb. So far, it's just been higher high, higher low, higher high, higher low, higher high. Now can we build another higher low? But place your bets and good luck. Now, I've gone back and I've listened to and edited this video 3 times through, and it's 33 minutes long. And I'm sorry, there is so much rambling in here. I think it is just such an intense time that we're at right now. This is kind of that big answer that's coming from the markets right now. And I get it. Everybody wants to hear high conviction on crash or breakout. I know that's what everybody wants to hear, but you reach these critical kind of periods right now. And this is that one where it's like, it seems like, this climb back up to over $69,000. Now getting to this point, okay, it's like, all right, now this is the confluence point of the things that we talked about from 2019 and 2020's retrace that ultimately led to a bigger move. This is that confluence move. This was that thing that happened before the C-19 flush. Now it's time to prove that we're not going to do that. And that's just kind of where we're at right now. Now we're looking for signs to say, hey, a floor can hold at $61, $62, $63, $64,000 and then go break above 72. And then you go and do that. And then you start to just wipe out that whole idea right there, right? But at this point right now, this is your confluence marking of being like, all right, here you go. Rubber meet the road. You're at it. And what's absolutely astonishing about it, and even the thing that's just written all about here in the historical timing of the markets, is that you get this to happen at the exact same time where all historical expansions have taken place. So it's a historical moment happening right here, because you have this setup of this thing exactly at the same time where you have the setups of expansions always taking place. And for most people who probably just don't live in the charts like I do every day of my life, to know that this is such a historical moment that is happening right in here, because so many things will get proven wrong permanently on the chart. Things like the 50-week moving average will get proven wrong for the first time ever. Or things like the 4-year cycles will get proven wrong for the first time ever. Or things like a lack of breadth showing up late will get proven wrong for the first time ever in Bitcoin's life history. Not in the history of the Russell, but in Bitcoin's history. And so it's just such an intense moment right now. And we'll keep our eyes on it every day. Again, I didn't spend a lot of time going through all the other things on being like, look, safety trade dominance, it's got the setup to break down. Of course, I still lean that way. I still lean towards, Bitcoin's just going to range around in here between 61 and 69 until finally it gets a move. But there's no way I can go without showing you. All right, here we go. C-19. Let's see what happens here. So It's truly fascinating, and I apologize for all the long rambling and how long this video is. And maybe it's just how Monday morning started off for me. But I really did spend the weekend looking into those times from 1999, and that was the most fascinating thing to me. That we have seen this breadth dynamic once before in the stock market, and we didn't really go into super detail about it happening in crypto and Bitcoin in 2017, but we saw it there before too. But okay, I will quit rambling. Either way, we'll check on it tomorrow. And of course, we'll check in it on markets in the morning. I hope you guys had a wonderful weekend. I hope you have a great day. Of course, check out the newsletter over here on blockchainbacker.substack.com. You can check out my website over here on bcbacker.com with over 40 videos and 11 hours of content teaching you how to set up your own charts and indicators within TradingView and CoinTrader Pro. There are links down here in the description of this video to bcbacker.com and to the newsletter at blockchainbacker.substack.com. Otherwise, have a wonderful day, and thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice, and I am not a financial advisor, but if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.